Welcome back to Stocklabs Market Recaps. Just crossed the midpoint of October on the 14th, and it was a pretty gross week for markets. I mean, they were soft overall, and we basically sold off to start the week. Then CPI on Thursday came in hotter than expected. There was a giant sell off at the open, which completely reversed and went bigly green by the close. But then Friday, we opened a little bit higher and then ended up selling off all day Friday, which kind of gave the impression that the Thursday rally was not for real. The overall performance for the indices was okay. The Qs were down 3.25. They were the underperformer, which sort of went along with bonds. Kind of fell apart again after the CPI data. S&P was down 1.5%, not too bad, I guess. IWM down 1%, and the Dow outperformer was magically up 1.2%. Crude trade backed off again this week. This trade has been swinging around a lot in recent weeks. And what else? Okay, emerging markets we don't pay attention to that much. Gold. Okay, the dollar had I think dollar had a pretty good week, so yeah, gold was down. And credit markets still soft. HYG down 0.8, but okay. For our leaders, if we can even call them that anymore, because they've been so bad this year. Okay, Tesla underperformer down 8% for the week. Netflix was the outperformer, actually green plus 2.3% and still kind of way off its 52-week lows. NVIDIA down 7%. Semiconductors have been a terrible trade. Semis were down big. I think Taiwan Semiconductor was down big. There's a lot more news coming out around Taiwan and all this stuff, which is obviously big semi-locale, and I mean, not that it has anything to do with the recent sell-off in semis. Is just another kind of uncertainty that people have about the space. Amazon down 7% for the week. Facebook down 5%. Facebook has been probably the worst of the, not probably, it is down 62% this year. Okay, NVIDIA is also down 62%, and Netflix is also down 62% year to date. But Meta, this is like multi-year lows, 126. Might be a little bit of a confidence problem in Zuckerberg, investor confidence problem with Zuckerberg executing this metaverse transition, because it doesn't seem to be catching on as quickly as hoped for. Not that Facebook ever said that it was going to be a fast thing, but when people don't see results right away, they start to extrapolate out that there will never be results. So that's kind of the situation Facebook or Meta's in right now. It's more of like they have to prove something. Okay, on industry basis for breadth, okay, a lot of these sectors were more or less just slightly down. Okay, healthcare was down 2.5%. Industrials down 1.25% is kind of like market performed. Basic materials got hit down 3% on a median basis, which is not too bad because oil was down 6-7%. Tech down 5%, underperformer again on a median basis, and utilities down 1.25%, which actually is not too bad considering what the bond market did and how these utility stocks have been kind of just dismantled over the last couple months, with bond yields busting loose every single day, it seems. As far as subsectors, okay, wasn't anything that impressive. Up 5%. We had tankers, tobacco, and airlines. Airlines basically been a terrible trade since they've been available to trade. So don't really pay attention to those too much. Tobacco, okay, it's kind of strange that these are up 5.5% because these tend to be a little bit more like the bond proxy-ish uh, type stocks. Philip Morris, Altria, stuff, they pay big dividends. So yeah, kind of weird to see them up so much, but yeah, I mean, maybe people feel like if you're in a recession and you have an addiction, that's going to be the last thing that you cut back on. Just, I don't know, spitballing thesis there. And tankers, forget about that. It's just random sector down, or down, random sector. On the downside, we have, okay, semiconductors leading, solar leading. This is like healthcare, biotech type stuff, more semiconductors, electric vehicles, software, more semiconductors, software, more semiconductors, more semiconductors. Yeah. Basically, anything that resembles momentum or has resembled momentum in the past is kind of just getting killed or got killed again this past week. I mean, actually, they still are momentum. It's just momentum to the downside, which is a little less common than momentum on the upside, or less desirable, I guess, for investors. And then we've also got 24 subsectors that are down 5%, which is not crazy, but compared to what was on the long side, you could tell that everything kind of skewed just to the sell side for all these sectors, which is basically matching up with our overall soft market. If we look at breadth from a market cap standpoint, okay, 1 to 5 billion, down 1.8%, kind of in line with the market. 5 to 10 billion, down 2%, a little bit worse than the S&P. 10 to 50 billion, down 2.8%, worse than the S&P. 50 to 100 billion, down 1.5%, a little bit better than the overall market. And 100 billion plus, down 1.2%, which was slightly better than the market. But the overall, the biggest ones were all down. Okay, we've got XOM down. What was up? Berkshire was up. United Health was up. J&J was up. But these ones that we keep in our leadership basket, they were all down, and those are the biggest things out there. So, okay. Breadth, not good from industry standpoint, not that really that impressive from a market cap standpoint. And intelligence has what this week? Intelligence has, okay, energy bullish, biotech. Okay, short biotech is bullish, which means that biotech is bearish. Banks bullish. Banks have been reporting earnings. Some of the big ones reported in the last week, and I think they were more or less hit or miss. Some said good things, some said some weren't as encouraging. I think JP Morgan was trying to kind of paint a more neutral picture of things. And yeah, so banks rated bullish this week. Gosh, more energy. Brazil bullish. I don't know who's trading Brazil, but okay. SPXS and TEX, two bear ETFs on the overall market. Those are bullish this week, which is the overall market trend can expect to be down, and then crude oil bullish. So if we flip this around to the downside, and resort this. Okay, UVXY volatility is bearish this week. And sort of coupled that with the bearish overall market ETFs, you might expect some more or less choppy downside action as opposed to like collapse type action. Okay, crude oil ETF, bear crude ETF is bearish, bullish crude. Bear natty gas is bearish, so bullish natty gas. Bear energy bearish, so bullish energy. TARK I think is long, is levered long the ARK ETF. Okay, that's bearish this week, so not great. Renaissance, don't know what that is. Consumer discretionary, bearish, and weed bearish as always. So, okay, it looks like it's going to be another soft week for the market, which basically just follows the trend that we've been on uh, since August-ish, and actually the whole year. We're not really that close to oversold. 2.25 on hybrid score. We need 2.0 for oversold. We actually haven't gotten an oversold signal since mid to late September, and that oversold signal didn't really produce the type of bounce that we would have hoped to seen. Before that, we haven't had any oversold signals since May or April. So maybe we'll get another oversold signal this week and try and look for conditions that would be more conducive to a market bounce. But for now, I think you're kind of just looking at some choppy action. Probably on Monday, we'll make a little bit of try and make an up move attempt just to test out if the Friday sell-off was for real, but expect that move to kind of reject and end up petering out pretty quickly. I think by the end of the week, we'll be closed a little bit. We'll be closed lower from where we started. So yeah, that's pretty much it. We'll see how it goes. We'll check back in on it next week, and yeah, manage some risk out there, stay safe, and enjoy the Halloween season. Talk to you guys later. Bye.